Hello, everybody, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day. Before we get started, standard disclaimer: nothing here is investing advice. Do your own due diligence. And today's guest is an independent precious metals and Bitcoin analyst, trader, and investor, and the founder of Midas Touch Consulting, Florian Grummes. Welcome to the show.
Thank you, Jesse, for having me. Thanks. Pleasure to be here.
Thank you for being here. And as you are a new guest, we always start with the origin story. So, how did you first discover investing, and how did that ultimately lead you to the precious metals and to founding Midas Touch Consulting?
Well, I'm into financial markets for nearly 30 years. That's how long it is ago that I bought my first stock. I was intrigued by obviously the upcoming internet boom back then. And as a young 19-year-old, I think I put basically all my money into one stock, the Deutsche Telekom, the German telecom, which had a big IPO back then. And somehow my first investment became a 10 bagger in the following, I think, 6 years. And when intuitively realized in, I think it was March of 2000, March 2000. So this is like 23 and a half years ago. Intuitively, I realized that it probably is a good time to sell because all my friends, everybody was talking about internet stocks. I had no clue about markets, investing, technical analysis. Basically, you couldn't just check the prices on the internet back then. I remember checking the stock price every few days or once a week on the video text in the television. So totally different times than today. But yeah, intuitively in March 2000, I went to my bank. You had to go there in person. There was no internet trading or anything. And I said I wanted to sell the whole position, and the guy talked me out of it. Unbelievable. He said to me like, "No, it's going much higher." And there was the Berlin technology conference, something Funkausstellung, I think, was coming up. And he said like, "Oh, no worries, these stocks are gonna run even higher." And the stock was topping out exactly around 100 euros, basically around that time when I wanted to sell. So obviously, the next time I checked, the stock was down already at 10%, around 90 euros. So the typical rookie reaction is like, "Oh no, at that price, I'm not selling anymore. Now I want to have my 100 euros per share." So of course, the stock never saw the 100 euros again. It sailed south for the following 2 years, and I think I sold like at probably 30 or 40 euros. I don't remember exactly. Still a nice gain, but far away from that big 10 bagger that was like for me quite an impressive amount of money back then as a young guy. So that was my first experience, my first stock investment, and I had a few similar other experiences with the banking world, and quickly realized once I got more successful in my other ventures. I'm coming from music. I'm a music producer and composer. And when I was successful in 2001 and two and brought the money to the bank, they actually also screwed it up in the internet stocks back then. So I decided to take this in my own hands 21 years or something, 22 years ago. And I remembered my grandfather that I never met in person. He died 3 months after my birth in 1975, but he left a letter because he was aware that I was born. And he left a letter for me with an American gold coin, a rare American gold coin. And in this letter, he basically wrote that this should be the foundation of my future wealth. And that was subconsciously heavily influencing me as a young boy when my father showed me that. And when I started to understand at least a little bit, I mean, I had no clue about gold, but somehow my grandfather managed to basically channel that understanding or idea of investing and owning gold over the generation of my father to me, because my father was not into investing and certainly also not into precious metals. And when I asked my bank 21 years ago that I would like to invest into gold, they looked at me like whether I'm completely nuts. And that was basically the day when I decided, okay, I need to take this in my own hands. The only thing I realized, or that was very clear for me, is that all these people that I basically gave my money to manage had no clue. The only thing that they were doing were pushing products on me, trying to get as much commissions as possible, charging me for managing the money, even though losing money, which all made no sense. And it became rather quickly clear to me that they had no clue what they were talking about. And so I decided to take this in my own hand. And that was luckily, in hindsight, also the start of the precious metals bull market. Back then, there were not a lot of research available. It's still the early days of the internet, and there were neither bullion dealers around. So I bought my first Kruger on eBay. And back then, in 2001, you actually could find coins with like 10% below melt price or melt value, because there was zero interest. It was really the end of a 20-year bear market. Nobody was interested in precious metals. And that's basically, somehow, luckily, with a great timing, but without knowing, obviously, and without being aware of it, I started with a good timing in the precious metal sector. And yeah, once you start investing into gold, you start studying history, you study the markets, you study especially money. You understand that this is all a big Ponzi scheme. It's backed by nothing than promises and paper and basically hot air and maybe the force of the state, but nothing really like hard asset like it used to be. And yeah, once you go down the rabbit hole, there is no turning back anymore. So I became very much focused on the precious metals and on commodities, started investing in mining stocks, and also realized that there was not a lot of research. And while going to all these seminars, workshops, reading these books, and obviously also doing every mistake you can imagine in investing and trading, I started also writing down my ideas and did write about the markets, and especially, of course, gold. And yeah, within a short period of time, I started publishing it, and there was quite a few people interested in, and this grow constantly. And yeah, over the years, I had some good calls. It became my company, Midas Touch Consulting, and here we are. I think I'm doing this now for 15 years. I'm not a perma bull. When it comes to the pricing, I believe that gold will be the last man standing, and that's why I'm also, of course, a gold bug. But I'm not a perma bull, so I had many good bearish calls over the years as well. And I think that's also something why people like to follow me.
Well, let's get more specifically into gold in a moment. But first, I'd like to get your view on the broad economy, because the hard landing versus soft landing debate continues to heat up. We have Goldman Sachs recently lowering its recession odds to just 15%, and many other people like Peter Schiff, David Hay, and pretty much every other guest on my show calling for a recession. So, how do you see things unfolding?
Well, I mean, the honest answer is nobody knows, right? It's a lot of guessing, and we have a mix of things that have happened over the last few years that is unprecedented. I mean, really, nobody really knows what's going to happen. Personally, I assume that Mr. Powell and the Fed has been taking this whole situation very personal, because they have basically been way too late acknowledging and realizing that we have inflation. And now they really trying to be as hard as possible. And probably they will have, again, a very bad timing. I don't think that in a debt-based or money system, currency system, you can have these high interest rates anymore. um, Even though it might seem like the only solution that we still have, I don't think it will work out. So I think that they will basically create massive contraction. It's already happening. I think Germany, Europe is already in a recession, and I think if you are honestly looking at the numbers from the United States, it's also looking like it's going to happen soon. Um, so I think they're gonna create a credit event similar to what we've seen actually already in March. It took just one weekend for them to pivot and to come up with 400 billion out of thin air. So this is the road we are on to, and it's just a question of time. Probably, and I have also been underestimating how long it might take. Uh, it looks like Mr. Powell and his Fed members going to be very stubborn and trying to keep up interest rates as long as possible, and hence the destruction will be even bigger. And the most important point to understand is every time they have to come up with a rescue package, the rescue package has to be much bigger than the one before. So that's why we are in the longer run very likely on the way to a cracker boom, and then later on as well probably hyperinflation, because we're not talking millions and billions anymore. We're talking trillions and quadrillions next time. So, and that obviously is destroying the confidence of the people into that paper money system, right? And that's the only thing that this system is based on. The people still blindly believing in it. And there is a critical mass of people in a society once they are awake and understand what's going on, then then you lose the confidence, and then it's basically Venezuela hyperinflation kind of style that will come. But obviously, this could still take a few more years. Who knows? And then you have the situation that they obviously trying within that few years that they might have left, come up with a digital central bank money system to force everybody into that CBDC setup, and then there is no escape anymore. And whether you are aware of it and whether there is hyperinflation or not, they will just control every little millimeter of our lives and make it impossible to escape. So that's basically, I think, what's going on in the bigger picture. I still have some hope left that the free market will basically figure out what's actually going on. And obviously there is lots of different players on the planet, so especially the conflict between the United States and China is obviously step by step heating up as well, and gold plays an important role in that whole story. So we will have to see how it really plays out, but my assumption is that they will try to keep up interest rates as high as possible and as long as possible, and probably they will again have a bad timing and will destroy the markets. We are already seeing credit contraction, and once there's a credit freeze, then they will have to come up with huge rescue packages again.
Well, I'd like to expand on the comment you made about hyperinflation. Because if the US dollar hyperinflates, will that cause an effect that will cascade throughout the global economy and cause hyperinflation in other currencies? In other words, a global hyperinflation. Would that occur, or would other currencies, some of them be more resilient and be able to actually rise above the US dollar and not have to deal with hyperinflation? And what would that mean for, obviously, as North Americans, myself Canadian, and you're German, but in Germany as well, the last time there was hyperinflation was Weimar, right? And that was some time ago. It's not on a lot of people's minds today. In fact, I think most people wouldn't even imagine that it would be possible. So in a hyperinflationary scenario, what does that mean for people's day-to-day lives?
Yeah, so the German hyperinflation is pretty much exactly 100 years ago. And I still have, I think, a 1 billion Reichsmark banknote, which was stamped a few times with different amounts of money that it should represent, right? So I think initially it was probably just a million, and then they stamped it and made it 10 million, and then finally became a billion or something. So yeah, I mean, it's devastating for 95 to 99% of the population. Everybody who's living from paycheck to paycheck will have huge challenges, because there is no increase in salary every day. And I mean, it basically destroys the whole economy and the whole society. I mean, we're not there yet, and it's very tricky to figure out how it exactly will play out. Is the dollar maybe just inflating like it is already over the last 20, 50, 100 years against hard assets like precious metals, like against real estate, against stocks? Because in comparison to many other currencies, the dollar has held up rather well. and I would assume that it's still a, a better currency than the euro, than the rupee, than many other currencies. So maybe the ones that are more commodity related countries, so that would be the Canadian dollar, that could be the Australian dollar, that could be the Brazilian real, where you also have especially in Brazil, where you have a rather favorable demography in the country. That could be something, but in the end of the day, the problem with the discipline in a paper based money system is everywhere the same. So the Europeans have expanded the balance sheet like crazy, similar to the Americans, and probably the dollar will be stronger still in most of the other currencies. So, but against real estate, against stocks, against precious metals, against also very likely Bitcoin, it will lose purchasing power.
You brought up Bitcoin. I want to get into that later, a very contentious topic in the precious metals community. But let's start first by talking about precious metals and gold, where you see it standing right now. It has recently reached all-time highs in Japanese yen terms, as well as several other currencies, proving itself as a great hedge against inflation and currency debasement in a number of countries. A lot of people point out that it is hovering near all-time highs. So how far does it really have to run from here? You've mentioned you're not a perma bull. There are times when you're bearish on gold. At this moment in time, how are you feeling about the gold market?
Well, I'm cautiously optimistic or bullish because it's just closely trading below its all-time highs. So the all-time high was at $2,075 around about 3 years ago in August of 2020, and since then it has been consolidating, oscillating, digesting this big move which happened before from $1,000, 1,045 up to 2,075, which was basically 100% increase within a few years. So the gold market needs some time to digest that. I think that's totally healthy and normal. Currently, it's trading around 1,920. So, roughly speaking, $150 below its all time highs. That's what needs to be taken out sustainably on a daily, weekly, of course, and also on a monthly closing price. And then we have a breakout. And if you zoom out and look at the bigger picture, gold is running against this whole resistance zone between 1900 and 2100, let's say, like roughly speaking, for the last 12 years now. It's been a huge consolidation pattern, and I think there has been a lot of energy being compressed over the years. And it's also a technical formation, and it's very obvious that once gold breaks above this all-time high at 2075, it's very likely that we're going to see a big rally towards 2,500 and higher rather quickly. And it's from a technical perspective, I think looking very interesting, much more promising than most of the other markets. And I think fundamentally there is also a lot of reasons on the table to assume and expect that breakout to happen sooner or later. Of course, right now with the tightening from Federal Reserve and from the rate hiking cycle, it's a little bit challenging. Of course, you would assume that if they pivot, gold should shoot through the roof, right? And we are not there yet, and it could still take a few more months, maybe even a half a year. Who knows? Could also happen in 2 weeks. It's unclear here, but I think everything is lined up for the next leg up in the bull market in that started in 2001. That back then $250, that was the start. It took gold to 1920 within 10 years, and since that high at 1920 up to today, basically gold is somehow consolidating and working on this next, basically building the base for the next leg higher in this bull market. So I'm very optimistic in the mid to longer term. Over the next 3-4 months, let's see how this plays out. I assume that if we get a credit contraction and a rather deflationary move in the markets, gold will also have some challenges, right? Because if people get margin calls in their stock portfolios, they will sell their gold position. If people are having issues to come up with liquidity, they will have to sell their gold positions. Um, that's the normal thing that I also had to learn painfully back in 2008. But that's something that's kind of like the black swan. That's not really clear. It could be that we had this big sell off last year already, and gold now first will break out, and then if this whole credit contraction intensifies, then maybe it's the move from 2,500 and 2,800 back down to $2,100, where basically gold is suffering for with the other markets together. That could be an alternative way. Um, but I mean, it's obvious if they come back to the markets to rescue, uh, there is no way out anymore. I mean, and gold understands this very well, and I'm very optimistic in the mid to longer term. Short term, I'm still a little bit cautious. It looks like we still have a little bit of downside. Let's say 1860, 1875. That's right now my worst case scenario, unless we have a big black swan in the market. But if not, that would be my worst case. Interestingly, over the last 12 years, early September until mid of December is rather challenging from a seasonal perspective for gold. It used to be, if you look at the data of the last 55 years, it used to be that gold usually started a strong move higher somewhere in June, July, into the end of the year. That was the normal seasonal cycle, but it has changed over the last 12 years, and usually September until the last FOMC meeting mid-December have been rather challenging for gold. So that is also something to be considered. I don't see a lot of downside. I think more it's like this grinding lower, nothing really goes on. Gold bugs once again are getting disappointed, and at some point suddenly the rally starts. And then it can happen very fast, because all that gold needs now is a daily and a weekly close above 1985. And I think from that moment on, the focus of the market will immediately shift towards 2000 and a breakout. So that's where the attention and the focus will go from all market participants. And then it's really just a question of probably a few weeks.
And how about silver? On the bearish side, some people are saying that it's become much more of an industrial commodity. It's no longer a monetary metal. And in the case of a recession, that could decrease demand for silver. On the other side of things, it's very far below its all time highs, unlike gold. So other people are pointing to the fact that it's extraordinarily undervalued at this point in time. How do you see silver performing up ahead? And do you think it could fall as an industrial commodity in the face of a recession?
Well, for me, silver is the little brother of gold. It will always follow gold, and only at extreme situations it will do its own thing. Um, in the end of the day, once we crunch the numbers and looking back to the bull market, once it's over, let's say in a few years, you will find out that silver outperformed gold drastically overall. However, most of that outperformance happens in the last quarter of a bull market. And I remember between 2001 and 2011, silver had a very, very hard time to get above $20. I mean, it took many years even to get there, and it tried many, many times. It failed. It had violent pullbacks. It was very tough, and then finally in 2010, in autumn of 2010, at $17, silver started to run, and it ran for 9 months up to $50. Unbelievable performance, outperformed everything in the end of the day. But if you look back over the 10 years of this bull market back then, the first leg in in the secular bull market, um, yeah, you didn't miss a lot overall in the first, let's say, 8 years of that bull market. It would have been enough to buy silver in the deflationary crash of 2008 when it dropped all the way back to, I think, $8 or $9. That would be still a good entry. So people are very impatient. People don't understand that silver is a super tiny, difficult market to trade. I'm not trading silver at all. I invest only physically. Yes, if you pick the right silver mining stock at the right time, you can have unbelievable returns. But you need to understand that most of the time, silver is just following gold, and only in the last stage of a bull market, it's doing its own thing. And I believe and assume that in this bull market that is coming, um, silver will break out above $50, and it will probably go to three-digit numbers, very likely. Um, but we have to see at which point it will actually do really its own thing. Until then, it will mainly follow gold. I mean, I have to admit that last September and also this year in June, silver bottomed out before gold, which was interesting. Usually doesn't happen. That's a positive. But then again, I mean, silver is still trading far below the $30 resistance level, which is the resistance over the last 3 years, and it had a hard time to get even into that zone. So you have to be very patient with silver. Ideally, you hold it physically. You don't. I don't suggest trading silver with leverage. That's, I think, extremely risky. And also, uh, if you have a bull market or a bull run, a rally in precious metals, in gold, usually once silver shows up and suddenly you have 1 or 2 weeks crazy moves up in the silver market, that's actually the signal for you that, okay, this rally is coming to an end. It's time to leave also my gold positions in the miners. We're very close to the final point here where the sector is turning around. So that's something that I, for example, like about silver, because it has a very good indication that a rally is coming to an end once it shows really strength. So you want to be careful. Again, I think overall, if you crunch the numbers after that bull market, you will find that silver has outperformed everything. But it's a tiny market. It's a tricky market. So I would definitely recommend cautious investing in physical metal only.
So let's go there. Let's talk about Bitcoin. Obviously, an emotional topic for some reason, particularly when it comes to gold and silver bugs. They tend to hate it, usually for the most part. It also goes both way. You have Bitcoin maximalists who call gold a boomer rock, etc. And there seems to be an endless debate online. But I myself am also a Bitcoiner, much to the chagrin of my subscribers, probably, because I always get negative comments whenever I bring it up. But you are one of the few people in the precious metals community who also invests in Bitcoin. So, could you make a case for owning Bitcoin to people who obviously gold bugs and silver bugs are already familiar with the concept of sound money? So, how is Bitcoin sound money?
Well, you have to understand that in Bitcoin's case, the code math is the law basically, and nobody's able to change it because the Bitcoin blockchain, which is a rather old school blockchain nowadays, it's not the latest technology, but the network is so distributed all over the world, and therefore it's very decentralized. So it's basically impossible for one party to take control and change it anymore. So you will always end up with 21 million bitcoins, and that makes it actually now scarcer than gold. Now with the next halving, it will be scarcer than gold. So I understand that this is sometimes a little bit challenging, but I personally think this um, symbiosis of a digital asset and an analog asset is much more powerful. And I mean, the world is constantly moving forward. We're living in the internet age and the information age. We constantly spend the whole day in front of the internet. We need some form of electronic money. Um, and one of the big arguments, of course, is, for example, if you have big amounts of money, it's very difficult to move them around in physical gold and silver, especially in silver, but also in gold. And with Bitcoin, you can move millions and billions very easily within seconds, or at a maximum, maybe a few minutes. Um, and I think there is a strong case for it. I don't believe that, at least it doesn't look like that, we're going back to a gold standard. It's very unlikely at the moment. But personally, I love the mix. I mean, gold doesn't need electricity, it doesn't need free available internet, it doesn't leave any traces necessarily, and it's also decentralized. You can also make the argument it's just a shiny rock, and people believe in it since 5,000 years, which is actually true. But it's still much better than everything else that mankind came up over the last 5,000 years. And at the same time, Bitcoin, you can move it around very quickly. You can basically remember your private keys in your head, and you will have access to millions and billions wherever you are. There's no confiscation. There's no censorship, um, and they together, I think, make a very strong, resilient, sound money case. So I'm not in the camp either or. I think they complement each other, and who knows where this all is going, right? I mean, if we will have CBDCs, Bitcoin could be the only solution for you, because maybe they will prohibit that you sell your physical gold, or they will force you to sell your physical gold. And if you don't do, you basically are a criminal. And there's lots of, and then you have to sell it on the black market with like maybe 20, 30, 50% off the normal price. Who knows? So there's a lot of things that could happen. And as a family father of two, I understand that I have to diversify myself a little bit. So I think that's one of the biggest mistakes that most of the gold bugs are doing. Once you have understood that we're living in a Ponzi scheme and this is all just fake in the end of the day, it's very hard to invest in other asset classes than precious metals. So that's why I usually see a lot of gold bugs. They have all their money in physical precious metals, in mining stocks, in gold futures and options and private placements, and you name it. But you need to be a little bit diversified. And I think the percentages is that's where you individually make your decisions, and balance your risk, whether you like more or less risk. But we have to assume that if we are getting into a cracker boom and later on hyperinflation kind of scenario, that Bitcoin most likely will outperform gold, because it's scarcer, it's less distributed, and it's quicker, and it's internet money. So you want to be part of this, and I think there's nothing speaking against it to put 1 up to 5% of your net worth into Bitcoin, generally speaking. At the same time, I have to also admit that I'm not as idealistic as I used to be about Bitcoin. Been, I mean, I'm into Bitcoin now for nearly 11 years. I bought my first Bitcoin below $100. And the idea of decentralization, Austrian School of Economics, free money in the internet, I mean, free market money in the internet, it was exciting. And now what has happened, that the Sprott, not sorry, not the Sprott, that the BlackRock spot ETF is coming, and the same company also owns the five largest mining companies, is questionable, because they basically, in the end of the day, just bought the whole thing. So um, they might be then able with that power and form of the mining companies to change things, or just the fact, and I mean, we know this also from the precious metal sector, that when the GLD came to the market, it, it's been driving gold up for sure. It's been one of the big drivers starting in 2005 and 6 up to 2011. But it's still until today the discussion, do they really have all the gold? If you buy GLD right now, are they immediately buying the physical gold, or maybe are they buying 5 weeks later? Is there any gold that they're lending out? Is there any derivatives built on top of the GLD? And then in the end of the day, the paper market rules the pricing. I mean, we know that in gold, 200 paper ounces of gold are being traded for one real physical ounce, and that's a big problem in terms of finding the right price. There's all the doors are open for manipulation, and it looks like they are setting up something similar now with Bitcoin. So the initial idea is in question, I would say. I understand that. I mean, if you are, let's say, an asset manager and you have clients and you need to make a portfolio statement and you have invested 1% of their assets in Bitcoin and you hold it on a private key with a wallet, um, cold wallet, it's gonna be very tricky just for the bookkeeping and just for all this data and systemized approaches that are necessary to show what's actually going on. So from that perspective, it makes sense to have a spot ETF, of course, but it's going against the initial idea of Bitcoin, and we will have to see how this plays out. So I'm not as excited as I used to be, also because I'm still missing like the adaptation in the real world. I mean, yes, it's always trading and speculation back and forth, and gold also. In the end of the day, the real adaptation is jewelry. In the end of the day, and maybe some gold teas and a little bit of industrial use case, but the rest is also investing, trading, speculation. Um, but we have these discussions for years and years already that you will buy your coffee with Bitcoin and the Lightning Network. And in the end of the day, until today, it's still very complex, still very complicated. Uh, Real use cases haven't really materialized. There's a lot of scam in the sector, which is not the fault of Bitcoin itself, but um, we have to see how this all goes. So I just wanted to add that I'm not as idealistic anymore as I used to be. I mean, I didn't imagine Bitcoin going from $100 to 69,000. Obviously, it was a huge bull run. And again, similar also like most of the other markets, Bitcoin also needs new liquidity coming into the system. If they continue with quantitative tightening and raising interest rates, and basically tightening the money supply, Bitcoin has a hard time too. So, and that's what we're currently seeing. Although you could make the argument that we are in this classic accumulation phase right now. Next year is the halving, and that could change everything again. And maybe until then, we already had or have the credit event. And once they open up the doors and start flooding the markets again, then Bitcoin, I think, will be a faster horse than gold. So I think you want to diversify yourself. And let's say if it goes below 20,000, I would say 20 to 15,000. That's probably an interesting area to add Bitcoin again.
Very nuanced answer, as all of your answers have been today. It's been a delight talking with you, Florian. You bring a lot to the table. I think people are going to get a lot out of this conversation. Before I let you go, for those who want to learn more, could you tell us about Midas Touch Consulting? And if there's anywhere else you want to direct people online, feel free as well.
Sure. Yeah. Thank you, Jesse. Well, our website is midastouch-consulting.com. We publish usually once a week at least one report, either on gold, silver, or Bitcoin. Sometimes it's even two or three. Everything is free for the readers. We also have a free Telegram channel, Midas Touch Consulting, where we have basically a mastermind group of investors from all over the world sharing ideas and research and the latest news, all with the focus on sound money, precious metals, commodities, mining stocks, and of course also Bitcoin and crypto, and always with the idea that freedom is the most important thing in our life.
Great. Well, I'll put a link in the description below to the Midas Touch Consulting website. Thank you once again, Florian, for joining us and sharing your knowledge with the audience.
You're welcome. Thank you very much. I appreciate it.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.